Good morning, everyone. You're all very welcome to our Monday preview for the week ahead. Again, we had a little bit of, I suppose, volatility again regarding Russia-Ukraine over the weekend with, I suppose, terms of Ukraine starting to become a little bit more open to a peaceful resolution from their rigorous stance over the last number of weeks or so. So I suppose, aside from the data this week, it would be very much keeping an eye on developments in that to see if there is a peaceful resolution or the development of a peaceful resolution. Moreover, again, when we just open up our economic calendar for the week ahead, we have quite a data heavy week ahead across the board, starting right through from really really tomorrow into Wednesday, into Thursday, and obviously NFPs to round off the week. So if we take a very, very quick look through the economic calendar, just before we take a quick view of the charts to preview the week, we have today being a more softer week. We have Bailey speaking later this morning, but overall not a massive amount of information coming out today. So we probably would expect today to be fairly flat and fairly quiet, obviously with the premise that we don't get any massive news regarding this Russia-Ukraine continuated war. So again, today should be probably fairly flat. There might be a little bit in the afternoon in terms of volatility, but overall, the busier days this week will definitely be Wednesday, Thursday, and Friday, respectively. Tomorrow, we do have Aussie retail sales overnight. We do have consumer confidence report in Germany, followed by a bit of data tomorrow afternoon in the US with Fed Williams, the house pricing index as well coming out, the monthly one, and we have the Schiller home price index as well. So the Schiller index will be something to keep an eye on to see, is all this inflation really continuing to ramp into the property sector and the housing prices market. So that would be an interesting one to keep an eye on tomorrow as well. Again, it's not very oftenly, and we will be watching the year-on-year report as well, so to see where is the yearly increases on the house prices faring at. Okay, now in the afternoon, we do have some Swiss data, we do have some Kiwi data tomorrow night, and then we have some retail trading data from Japan tomorrow evening. Again, Wednesday becoming a little bit more volatile. We've got Swiss, European, pound, and German data out before 12 o'clock tomorrow across the board between BOE's Broadbent Speech. So BOE Broadbent, Bank of England member Broadbent was a no rate increase in the previous Bank of England interest rate decision. So again, it'll be interesting to see, does his commentary change anything significantly? We do have Lagarde speaking tomorrow morning as well, which will be important for the ECB, and in terms of the updated consumer confidence and business climate as well. So that'll obviously affect businesses and consumers in terms of kind of where they're perceiving shorter run expectations. Wednesday afternoon, we do have then the emergence of a bit of US data, more prevalently core personal consumer expenditures will something to be keeping an eye out on, as well as employment change as well. So that'll be kind of gearing towards the NFP on Friday as well, which would be the 1st of April. So we do have, again, moving across to Thursday, we do have some Chinese data out overnight, manufacturing and non-manufacturing PMIs, which would be something that we'll be paying very, very close attention to within the Asian markets. We do have the GDP in the UK, followed by retail sales and unemployment in Germany and the Eurozone. We're keeping an eye on that. And then Thursday, as we know, tends to be the busiest trading day of the week. We've got Governor Lane, or Member Lane, should I say, speaking from the ECB. We've got the Gundos speaking at 10 o'clock as well. So two of the big influential ECB members are both speaking on Thursday morning. Follow that up with the initial jobless claims, follow that up with Fed Williams speaking, and of course, I suppose factoring that into consideration. Now, again, with Thursday, we've Williams, who is obviously becoming much more of a hawk. We've got the Chicago Purchasing Members Index as well. Now, the one thing that I'm just going to say as well, we also have to put this back to normal. Now, I've just noticed that my economic calendar has strayed slightly, obviously, with the clocks going forward last night. It just has to be updated. So we will also be putting that forward as well. So again, with GMT Standard Time, the data, the opens have come back to 10 p.m. this week in terms of the daily reset, and the data has obviously filtered back to the normal time. So NFP will come out at 1:30 rather than the previous 12:30, which would have been last week. So again, just factor that into this week's I suppose data points, that to make sure that you have the right time set on your economic calendars as well. Now, of course, as we said, Thursday, quite a lot of data coming out, but again, the US data will be geared towards Friday's NFP. So as we turn to Friday, we can see here that the Friday, again, going to be a fairly data heavy day. Again, a lot of light data in the morning, but again, the big emphasis this week will be in non-farm payrolls, unemployment rates, average hourly earnings, and of course, let's have a look at the ISM manufacturing as well at 3 o'clock. So we've got a bumper week this week. Wednesday, Thursday, Friday is going to be busy. It's going to be a volatile week, but again, absolutely paying very, very close attention to risk management, risk reward, and obviously tracking this economic data fairly closely. Of course, I'll have my FX Street for the data. I'll also have my tweet deck in the background running for the latest news and announcements. You can see here my tweet deck is loading in the background here, getting all my latest tweets and information on hand when it comes out. Now, let's have a quick look at the indices as we head to this week's open. We can see here, largely speaking, the indexes, again, the week before last, obviously had a massive bullish move off the lows. Last week had a fairly steady grind higher. Again, if we look at the 4-hour on the NASDAQ, we can kind of see the higher high, higher low scenario. And price action did come into this 14,800 level on the NASDAQ. Now, since then, we have seen the price action come back a little bit again holding this kind of newly forming kind of bullish structure where we have these higher highs, higher lows. So indices overall to begin the week is holding fairly strong and fairly consistent to the upside in this higher time frame structure. Of course, if we look at the Dow Jones again on the higher time frames, we can see that move. We had that initial pop into 34,800 over the previous week, but since then the price action has been fairly consolidated on the higher time frames as well. So we've seen the price action pretty much consolidate around 34,800 last week. So the Dow Jones was probably the less performing of the three, but we can see that it is sitting clearly and holding above this 800 exponential moving average, but confined underneath this 34,800, 875 level. So this is kind of what I'm paying close attention to this week. Can the price action break through? And can we see a more elongated move to the upside to continue the bullish momentum? Now, of course, we can see how consolidated the Dow Jones has been over the last number of weeks, kind of been up and down in this consolidationary zone. But again, it's something worth paying close attention to this week. S&Ps slightly more like the NASDAQ in comparison. We had that massive impulse off the lows like we saw with the other two. However, last week, the S&Ps did break through this nearer term level here, just around about 45.20, has broken through on Friday and is sitting above it as we begin this week here. So kind of 45.20, 45.25 should be your area lows. If we continue to hold above that, then there's absolutely no reason why we shouldn't try and push forward again back into this 45.90, 4600 level up here of the current highs, okay, or current near term highs from the beginning of February. So worth keeping an eye on that. As we look at gold, we've seen as the indices have been fairly bullish overall, and even again over the weekend we saw cryptos again extend higher. We can see that the gold prices has kind of taken a dip lower because of the positive outlook or the kind of the changing rhetoric and sentiment from Ukraine has meant that gold has rejected this 1960 for further and has continued to push back into this consolidationary zone. Now we did allude to it on last week that 1960 was an important level. We would need that to be taken out to have gold kind of pushing on and kind of pushing to new highs. We didn't quite see it. We saw 1960 hold, price actions rejected, simple supply and demand, and the price action has rolled over again with the Ukraine narrative being the catalyst behind the trading volume that we're seeing on the forefront of our charts. Now, again, the US 10-year is something that we've looked at kind of closely over the last number of weeks. And again, we can see that playing out ever so clearly. We're seeing that 10-year yield since the Fed, since Powell's commentary, which was Wednesday, 2 weeks ago. We have seen the 10-year yields, we've seen the yields more broadly speaking generally tick higher. We've broken through the 2% mark, we've broken through kind of 210, and the price action now is continuing to progress all the way higher and is now sitting at a mere modest 2.5%, which is truly an incredible move on what has been a very, very bullish month for the yields overall. Since the beginning of March, we actually had lows down at around about 1.68, 1.69%. We're now trailing way up here at 2.5. So this is the biggest month in yields that we've seen for many, many, many years. Even pre-COVID or dating back into the COVID sell-off, we had 3 months of heavy selling in the yields. This is by far only the biggest month that we've seen, particularly on the bullish side, for many, many, many years, as we said. If we look at the DXY very, very quickly, just to kind of round off the last couple of charts, the DXY continued to pop higher. So as gold has obviously weakened, as the indices have remained fairly strong, it's interesting to see how that play is coming off in the dollar. Obviously, with the gold hedge being taken off, there has been a little bit of a favoring in the dollar currency index, euro, dollar, cable, etc. And we're seeing the DXY dollar index push back into these near-term highs just underneath 99.50 at around about 99.30, 99.25. So again, our longer run expectations that we've alluded to for previous weeks and previous months at 100 and potentially these moves into the 102, 103 level that we've alluded to in previous calls is still fairly on the board, and we'll be tracking this closely. But of course, if the price action breaks through this area here, we would be then looking for a continuation to upside new highs. And of course, the number of Fed speakers this week, followed by important data on Thursday, followed by NFP on Friday, which we'll be doing a preview on Friday morning. It does leave the potential for price action to try and take to new highs. But of course, on the weekly, let's see how does the dollar play out, because on the daily, as I've alluded to, the price action is consolidated between these price points that we have alluded to. Now, of course, last but not least, let's have a quick look at oil. So quick look at oil from our call last Monday. Did mention the higher high, higher low scenarios, and the price action has met our 116 key level that we've alluded to. So we had the 115, kind of 116 key level. The price action has come into it. We've rejected it, and we've come back all the way trailed to this 50 EMA, just back under 110 at around about 109, 109.25. So it'll be interesting to see if this area holds here at 109, 109.25. Well, then there's no reason why the price action shouldn't try and make another pump back into 116. If we break back underneath, we would be looking for a more meaningful downside correction, probably back into this 104, potentially 102, and with a deeper move back into $100. So these become your price points if you have a bearish outlook for the remainder of the week. So again, risk reward, risk management, being patient, being disciplined. The one thing that I would always hone in on is having a checklist, having rationale that if you are buying or if you are selling on a particular contract, doesn't matter the strategy, doesn't matter the time frame, making sure you have all of these things factored into consideration to allow you to give you the greatest probability with your trades as possible. So that'll do us for the week. We will be back on Friday for another market recap, but also a preview for the NFP payrolls on Friday. So until then, have a great week, everyone.